Proven areas where buyers and sellers find some equilibrium. These are major turning points in the market. Today, we'll be talking about support and resistance. My name is Andrew Da Silva Williams. You already know, man. I'm just coming out here. I'm hitting every spot for you. I'm telling you every bit of everything you need to understand in this market. I just want you guys to know, like, we got 5 seconds. I want 5 seconds to go down there, hit that subscribe button if you're just joining us for the first time, and wait for me as I break down this chart for you, break down this market for you, which is called, today's topic is called support and resistance. All right. Yeah, so I'll be hitting it in the ball right now, and I want you guys to understand that, like, support and resistance is very, very, very important. Support and resistance. Support and resistance, you know, very important in the market, okay? And yeah, what is support and resistance? Support and resistance are proven areas where buyers and sellers find some equilibrium. These are major turning points in the market. You guys already know, I already said that these are proven points in the market. These are proven areas that whenever they're going up, like I already said, the higher highs and the higher lows, these are for uptrends, and the lower highs and the lower lows, these are already for downtrends. These are like levels formed when the price reverses and changes direction. The prices often respect these areas containing price movement until they break through them. In trending markets, support and resistance are formed from swing points in an uptrend, and in the previous swing points it acts as a level, is support level, and this downtrend, and in the downtrend the old swing point act as the resistance level. This is very, very important. This is very, very important because you guys already know, if you understand the support and resistance in the market, trust me, you don't need no strategy. With only this strategy, support and resistance strategy, which is called supply and demand, I tell you, you will never, never, never need nothing else. So today will be just join me as I break everything down for you. I just want to show you the uptrend market when it comes to the supply and resistance, because I know some of you guys are just coming into this game. You guys are just coming in. Like I already said, if you're just joining us for the first time, take your time. 5 seconds. I give you 5 seconds again. Hit that subscribe button. Hit that like button. Comment what you want. Just come and say anything down there, and I'll tell you. I will respond to you as soon as possible. All right. So yeah, we'll be going on now. We'll be going into the game now, which is, you have to understand the market structure at first, all right? So the market structure in an uptrend. So we'll be going into an uptrend. Today we'll be going into the uptrend straight up. You guys already know the uptrend consists of the higher highs and the higher lows, which is the higher highs and the higher lows. Yeah. And so on and so forth. But in today's topic, what we'll be talking about is basically the swing point, and the support level, because it's an uptrend. So we're just going to let you go, the swing point and the support level, right? So but in this case, we'll be coming down like this. Sorry. Oh, let me take this off. I told you guys this is not one of the best charts, but trust me, I'll just take my time and just explain this for you today. Once I explain this for you today, you understand what I mean whenever I come around and talk about support and resistance. It's not really that hard. You just need to understand whatever they're doing in the market. You need to understand the market. You guys already know. Yeah. So in a chart like this, what you'll be looking for is to spot the support level. And the support level, like I already said, in an uptrend, will consist of the higher highs and the higher lows. These are directions which the price will often respect. And these support and resistance level are, in other words, they are trend combination price movement. You know what I'm saying now? So if this is a trend, this is an uptrend. So what we're going to do is now to mark out the support and resistance and the support level. So this is going to be the support level, and this is absolutely, yeah, this support level, and this right here is definitely going to be the swing point. So we go the swing point. So this is how it is. We'll go again, support to support level, and this right here is the swing point. Basically, in an uptrend, this will consist of the support level and the swing point. So this is what you guys are supposed to understand, especially when you're going into the market for the first time. As long as you understand this and you know how to trade these, trust me, you don't have no problem in the market. Every time, and I'll come out here and tell you guys the truth about this stuff. This is what is making me coming out here to talk about, because I don't really have much time to expatiate or to elaborate a lot of things until I come down to this board just to explain everything, or I move into my chart. One of these days I'm walking into it. One of these days I'll go into my chart and I'll explain everything. But first and first, we have to bring out for the beginners, because the beginners don't really understand a lot of stuff in this market. So I will be going in. Everything is just time, So, and there's a lot of progress that is coming in. If you check into my YouTube channel, you see a lot of videos that when you watch them is going to impact you in certain kind of ways, and most of them are just basically from the beginners level, because I know what I'm doing. I'm just setting everything together just to give you guys the best, So this is actually an uptrend, and in an uptrend market, it consists of the support level and the swing point. And when you come into the uptrend and you see these, you already know this is a support level and this is a swing point. So what you want to do in an uptrend, once you're coming in, how to trade it, that's what I'll be telling you also in this market, in this chart. I'm teaching you guys how to trade it also, but for now, we're just going to understand the swing point and the support level, which is we're still going in with the support level. Yeah, and this is actually the swing point. This is an uptrend. Hope you guys know this is an uptrend, and in a downtrend, I'll take this off. So let's say in a downtrend, I'll do the downtrend right here, so you guys will see everything together. So in a downtrend, we have let's say we have lower high and the lower low, lower high and the lower low, lower high and the lower low, and so on and so forth. So we're coming out here. First thing, wait, hold on, I need to put this sheet together. Sorry. So we're like this. Yep, we're right there now. So this is a downtrend, and in a downtrend, this is going to be the resistance level. We say in a downtrend consists of the higher highs and lower highs and the lower lows. So this is going to be the swing point right here. This is going to be the swing point right here. This is going to be the resistance level, and this right here is going to be the swing point. You see, and so on and so forth. So like, yeah, resistance level right here, and this right here is actually the swing point. So like, this is how it is when you come into an uptrend and you go into the downtrend. So in some cases like this, you're going to meet the market like this. So what you're going to do, you're just going to identify the support level and the resistance level coming from an uptrend or a downtrend. All right. So yeah, so a lot of you guys, you need to understand the market structure. I already told you guys in my previous video, you watch out the market structure. I already showed you guys, explained everything to you guys, how to understand the market structure and how to identify the higher highs and the higher highs and the higher lows, and the lower highs and the lower lows. So you have to pay attention to these market structures. As long as you can identify the market structure and you understand where the market is going, and sometimes in a situation like this, you can see a market having a breakout. So those are stuff I'll be showing you guys, how the market breakouts and how the market reverses, because that's what you guys are supposed to be understanding today, or you guys are supposed to understand. If you're still watching this video up to this level, I want to say thank you. Take your time, hit that subscribe button, hit the like button, and pay attention to what I'm showing you guys. All right, so now we're going to how the trend reverses I want to show you guys how the trend reverses, so that whenever you see something like this, you already know how the trend reverses. All right, so I'll wipe this up. Hope you guys pay attention to this and you took note of this already. So I'll just wipe this up right now. Then I'll move into the next one, which is the trend reversals. And I'll show you guys a lot of stuff about liquidity also, because you need to understand the liquidity part. But I'm just using this board, man. This whiteboard is very, very, very good for me to use to elaborate. As long as I'm using this board, showing you guys everything, you guys are going to understand quickly, because I'm using it to explain everything properly for you guys. So now we're moving up, like, yeah, in an uptrend. This is where traders go wrong, especially when it goes into an uptrend. When the market is in an uptrend and it's trying to reverse. When the market is trying to reverse from an uptrend, you know the uptrend consists of the higher highs and the higher lows. In some situation, like the higher highs and the higher lows. Higher highs and the higher lows. But when you see the market is trying to reverse, first of all, when you see the market is trying to reverse, it's going to go from a high, instead of it giving you another higher high, which is supposed to be up here, it's going to give you a lower high. So in this part, you need to chill. This is where you need to chill and understand where the market is going. Once you see the market is supposed to give you a higher high up here, and it gives you a lower high, which is right here, what you're going to do is you're going to move and just chill for a bit and watch the market and watch what is happening to the market. Because in a lot of times, with my own experience, when the market is trying to reverse, it moves this way. And once you see this, instead of going to give you a higher high, it give you a lower high, the market will definitely come down here a little bit, try to give you again a lower high. So this is where the market shift occurs in the market. This is exactly where the market shift occurs in the market. So you need to pay attention to this. All right, this is what they call the market shift. When the market fails to give you a higher high, and it tends to give you a lower high, and it starts to give you a lower high to a lower low, just know that this is where the market shift occurs. And once the market is like this, you stay out of the market. It's trying to move from an uptrend into a downtrend. Basically, this is how it moves. So you need to understand this perfectly. This is not one of the best diagrams, but I'll tell you, this is what normally happens in the market. This is what normally happens. Let me draw it properly. Let me see if I could just put it up properly for you guys. So this is the lower high. Instead of it forming the higher high down here, it's going to form a lower high there, come down a little bit here in this form. So you'll be seeing something like this instead. So this is when the market is trying to change. This is what they call break of structure in the market. You see, this is what you call break of structure, BOS, break of structure in the market. And when the market tends to give you break of structure, just know there's a reversal, and you have to wait, because the market is switching from an uptrend into a downtrend. All right, pay attention to this. Pay attention to this, okay? And what you'll be looking for right now is, once the market turns into a downtrend, you'll be looking for how to sell. That's going to be your only trade you'll be taking at that point. Because once the market turns from an uptrend to a downtrend, what you'll be looking for definitely is how to sell that particular market. And I'll show you how it goes, because this is an uptrend. This is an uptrend reversal. You see, uptrend reversal. This is an uptrend reversal right here. How it goes to the break of structure and everything. You guys are supposed to pay attention to this. This is very, very crucial in the market. It happens often, and this is what you guys are supposed to understand. Now, as long as you understand this part, you're very, very good, and it actually comes in most of the time. But as long as you can identify the higher time frame to the lower time frame, like I already told you guys, when you're using the top-down analysis to identify, you know that you go from the higher time frame to the lower time frame. But when you come into the place that you want to take your trade, you make attention. You definitely make sure that your support and resistance points you can identify them in an uptrend, identify the break of structure also when the market is reversing. All right, this is what I'm here to tell you guys. I don't want you guys to do something else, something different. Just pay attention to this. Okay, so we'll be moving down to the downtrend reversal. Yeah, here's an uptrend reversal. I'll be moving to the downtrend reversal. Kind of really cool and easy, but it's never going to be easy if you don't know what you're doing. It's never going to be easy. You need to understand what you're doing. As long as you understand what you're doing, you know what is going on to happen, what's going to happen next in the market. All right, so yeah, in a downtrend reversal now. Yeah, downtrend reversal. Yeah, when the downtrend reversal now. So in the downtrend reversal, you know, I told you in the downtrend it consists of the lower highs and the lower lows. Lower highs and lower high and the lower low, right? So yeah, this is how it falls. So when the market is trying to change the reversal, that is going to reverse from a lower high to a lower low to a lower high, a higher high to a higher low. That's when it's moving from a downtrend to an uptrend. So whenever you see the market moving this way, which is lower high and lower lows, instead of the market to come down to give you another lower low, it's giving you a lower high right here. So, and it moves up, break the previous lower high. So this is what you call the break of structure. And instead it goes like this and it moves like this. So this is what you call the BOS. Actually it's called break of structure. Actually it's called break of structure. Sorry. Sorry for my words, man. You know, I'm always coming here to tell you guys the truth about this market. Whenever I see a market like this moving from a downtrend to an uptrend, just know when it fails to give you a lower low, and instead of giving you a lower low, it gives you a lower high, a higher high, just know the market has reversed. And once it reverses, you already know is an uptrend. What you're going to be looking for at that period of time is how to buy. Take note, how to buy. Make sure you understand these. These are parts that are very, very, very crucial in the market. It comes in, it shows, in fact, 90% of the market is like the market ranges. I'll show you the ranging also, because the market ranges most times also, and it trends like 40% of the time in the market trends. So you need to understand how the market moves from lower high to lower low, and when it breaks of structure also. And yeah, it is what it is, man. You need to understand. As long as you can understand this, man, really, really cool for you guys. Really, really cool. Not one of the best trades and charts, but man, watch it. Once you understand this, it's gonna be extremely cool for you, man. Yeah, so I'll be done for now. Be back in a minute, right? Now we'll be talking about the ranging market, right? The ranging trading. The ranging trading is very, very, very complicated, because you need to understand when the market is the market structure is unclear. It doesn't have no direction. When the ranging market is moving from, I'll show you right now, you know. So right now we're going about to the ranging market. So the ranging market is really, really uncertain, you know. I already showed you guys in my previous video something like this. So it moves from, I already showed you guys it has a double support and double resistance. Whenever you see the market showing you like a double support or a double resistance in the zone, just know that's a ranging market. So basically it moves like this, and as long as it moves like this, it doesn't have where it's going. So you can see it clearly, it doesn't have where it's going. No destination. It just, at this point, it doesn't have nothing else than to just confuse traders. And like I already told you guys, if you're not a professional trader, you never know how to trade a ranging market. So what you're supposed to do, you're just supposed to watch. If you are a beginner, please don't trade these. I'll repeat, if you're a beginner, please don't trade these. Try to understand this a ranging market before you try to trade it, because it's really really complicated, especially when you don't understand the market structures at the beginning. So you need to understand this when you're trading a ranging market. You always make sure you always know, like I said, this is a support level, this is a support level, and this is a resistance level right at the top. This resistance level, sorry. Yeah, you know, the topic of today is still is support or resistance. So this is basically a support level and a resistance level. You know, when I said when the market is the point where the market hits down and swing to the upside is called a resistance level, while the downside is called a support level. A lot of people call it supply and demand, but right today I'll be calling it support and resistance level. A lot of people call it supply and demand, sorry, so I'll be calling it support and resistance level for you guys. This is a ranging market. In a ranging market, what you're supposed to understand that the market doesn't have no destination. It's into deceive traders, and sometimes in the market you definitely watch it comes in with a breakout. Like when you have a ranging market like this, you should identify the support level and the resistance level. Just imagine you buying from here, going, and yeah, you go to this point, because that's how you trade it. You make sure you understand, first of all, you understand the movement of the market. Or let's say you buy from here right now, and you buy, the market is going up, giving you some profit. Definitely you want to take your profit from this zone before it reaches the previous resistance level. So what you do is once it reaches the previous resistance level, what the market normally does is, when you let me teach you how to identify the breakout. Because once the market is moving from a ranging market, it moves from support and resistance always. But when it wants to break out, that is when you don't really understand. That is when you don't really know, because you don't know when the market is breaking out. That's why, as a beginner trader, please don't go onto this market. Leave this market for professionals, and leave the market for people that have been trading this market for a long time, because you don't really understand. Because once let's say you buy from here and it gets up to this point, and you say, okay, once it comes to this point again, you're going to buy, and the market, instead of the market coming to this point, guess what? The market just, this is the breakout in this market. The market, instead of going back up, the market just goes down. What are you going to do if you're a beginner? What are you going to do at this point? Because you don't really understand. Once the market breaks out, this is what they call a breakout. And in a breakout like this, if you're in this trade trying to buy from here, you're already lost, because the market went down. So you need to identify the breakout. You need to know when the market is going to break out. That's why you need to leave the market in this period of time. That's why I tell people, when the market is ranging, that is the time you're supposed to relax. Every time I come out here, I tell you guys this: when the market is ranging, you have to relax. Don't trade that market. Leave the market to chill. Understand the market. This is psychological part of market of trading. You need to understand that there are some certain times for you to allow the market do its things. Because if you don't allow the market do its things, the market will come and haunt you. That's why some people complain about blown accounts. Yeah, they say, oh yeah, whenever I put my trades, just start complaining about a lot of things. But you definitely complain when you don't know how to trade. Because as long as you know how to trade, you never fall in a victim of a ranging market. Because a ranging market consists of no direction. No direction, no direction. It's just a straightforward, and it's called sideways market, because their neutral and their natural and their nature makes them to appear drift right, like it just goes horizontally. It moves horizontally, and once the market moves horizontally, it doesn't have no direction, just like this. You see, break out that way, and that's just how it goes. So I just want you guys to understand that this is a ranging market, and when in a ranging market, I just told you guys everything about the market and supply and resistance. The supply and resistance, yeah, support and resistance. Sorry, I just showed you guys everything about. Support and resistance. Support and resistance is basically when the market is moving to an uptrend. Basically, the equilibrium prices, and I already told you guys everything about it. So you need to identify the support and resistance when you're coming into a trade. I already told you guys, my name is Andrew Da Silva Williams. I broke down every part of this for you, and I want you guys to understand that whenever I'm coming to my next class, I'll be bringing up some good news, some juicy stuff for you guys. And follow me on my YouTube, follow me on my Instagram in case you're just joining us for the first time. And say, like I already said, hit that subscribe button if you're just joining us. This is a very short video. I don't want to take too much of your time. I just want to make you guys understand the aspect of trading, especially when it comes to support and resistance. Support and resistance is very, very key information that you guys need to understand. So please watch this video, understand this video, and I'm going to take you to my chart one of these days for you to understand. I'm already here today, and I want to say thank you and peace out. I love you guys. I love you everyone. I'll say bye bye. 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 Thank you.